Afternoon, morning, evening. Thank you for tuning in live, or thank you for watching this recording on the Alert Pilot application. Today, we're going to be jumping into some real-world assets, real-world assets on chain, tokenizing assets on chain, sort of going for a whole range of lower risk, higher market cap tokens that perhaps you didn't really correlate to being real-world assets before this call. But hopefully afterwards, you're going to sort of see the connection. And we're also going to delve into some sort of medium risk stuff and also some high risk stuff at the end, of course. Sort of this full spectrum of investments for this sector. And this sector is constantly growing. We covered this in August. And looking now, there are loads of new projects. Clearly, some projects have failed. Clearly, some projects have done very well. We'll sort of recap on some of the ideas that we covered last time and see how those ideas have sort of played out today. But the first thing I want to cover here is some of the bigger cap, let's say lower risk applications in the real world asset space. And the biggest one by market cap is Avalanche, right? So you think Avalanche is not the initial sort of thing you think about as tokenization of real world assets, but that's something they're really focusing on, right? And if you are an Avalanche investor, I'm sure you know this, but if you're sort of sitting on the outside, you invested in some other layer ones, some other layer twos, some other EVM chains, and you've heard of Avalanche, maybe you've had some in the past, you probably wouldn't know this is a thing they're really focusing on. So asset tokenization, they're talking about it a lot. They're starting a bunch of initiatives. They've also raised some capital, they had some capital they've sort of allocated to that space. But the first thing to sort of think about is, well, on their blog, they're posting about this on a regular basis. So Avalanche Network, they have that sort of blog in their application. They talk about what they're doing, what they're working on, what they're focusing on, and asset tokenization is a topic that comes up very frequently. They've also allocated $50 million into initiative, sort of pioneer the future of asset tokenization, as they put it here, where that money's going, what they're sort of going to be doing with it. Are they going to be investing into projects? They're going to be using it to build their own sort of sectors. I think that's something that they're still sort of exploring. I've not had too many more details sort of beyond this. One thing they are doing, quite interestingly, is this partnership with JP Morgan called Onyx that leverages the blockchain to sort of tokenize portfolio management. So again, pretty vague. Portfolio management could be a whole range of things, and exactly how they're tokenizing it, not completely sure. I don't think it's really released yet, and even if it was released, probably not something I'd ever use. But what they are definitely doing is working with JP Morgan on this idea of tokenizing investments, tokenizing portfolios, tokenizing different ways of managing your portfolio and having that on the Avalanche blockchain. So at least in my experience, or sort of my journey through cryptocurrency, I've not been around Avalanche too much. I've not invested into it in the past. And I don't really hear about it much, at least not in the cycles I'm in. I'm not sure where this is sort of super popular. At least the people that I speak to, the investors that I follow, that I listen to, they're not often talking about the Avalanche blockchain. Of course, it's got a massive market cap, $11 billion. It's doing very well. It's done very well this year. And it seems like real world assets is the sort of sector of the market where they want to position themselves to be heavily involved with. So a big cap, a lower risk investment, not predominantly focused on real world assets. Of course, they're a layer two first, EVM chain first, but it is something they're sort of going into in the future. And so when they wanted to move into the real world asset space with an investment and you wanted something low risk, I think this is probably going to be the lowest risk option you're going to find. Most of the stuff we'll be covering in the real world sector is just newer projects, lower cap projects, projects with much lower TVLs, project with much lower history, projects with much less terms of users, much lower amount of users. But if you want something big, you want something lower risk, it's probably going to move quite a lot if the real world, or when the real world asset sort of narrative really comes to its fruition and it becomes sort of the thing that everyone's talking about. I think Avalanche is a good place to place your bets. The next one, if you're sort of moving down the ladder of risk, let's say, I think the next one, pretty obvious again, Chainlink. I say obvious, but I don't think this is the first thing that comes to mind when people think about real world assets. Usually they're sort of thinking about tokenizing stocks or tokenizing bonds or interest-bearing stablecoins, like we'll discuss later, or yeah, like we're looking at with Avalanche, portfolio management sort of things. But Chainlink, of course, all it is bringing real-world data to the blockchain, right? It's an oracle. It gets data from the real world from different sources and transfers that into a way that is understandable by a smart contract, right? What do you sort of think of it that way? Like, well, of course, this is a real world asset play, a real world asset application, but I think there's a bit of a disconnect because it's not the primary thing people look for in that space. That can have, good and bad sides. A lot of investing in sort of narrative-based investing is based on perception, right? And if people don't draw that immediate connection between Chainlink and real-world assets, perhaps it won't move as much when that sector does come around. I'd also say with Chainlink, it's never been sort of a very interesting investment to me, just due to the pretty poor tokenomics, which has always sort of suppressed the price, in my opinion, and also been a bit of a push factor for investors when they think about, should I make an investment in Chainlink? They think, well, the tokenomics don't seem so good. I don't put my money here. I think it's always been the expectation that Chainlink is gonna, make meteoric gains. I see people say that all the time, and it's never happened. So it's always been a project, high expectations with often from a price perspective, pretty disappointing results. But it definitely is interacting in many ways, fundamentally, with the real world to transfer that data. So if you want a low risk pick, I'd say a very similar sort of level here to Avalanche. Chainlink just being as big as it is, we'll just sort of look into the numbers in a bit. Chainlink can be a good pick. So that's probably the two that I'd say classified as lower risk. If you want to delve into a bit more risk and sort of in that medium category, right? I think a very nice option here is Pyth. So this is, say, a competitor to Chainlink. It's also an oracle. It's bringing that real world data onto the blockchain, but it's doing so in a way that's slightly different. It's also targeting a different sector of the market. So Chainlink, been around for the longest time, has the biggest lead on the market. It's all of the big sort of DeFi applications you've probably used, Aave, Uniswap, everything like this. It is using Chainlink. Pyth is targeting more of that sort of Solana ecosystem, the alt layer ones, the alt EVM layer ones, also a lot of in the layer 2 space. And through these different layers, the layers that Chainlink is not so prevalent in, it's been able to generate a very high TVS. TVS means is total value secured. So if Chainlink is providing the oracles for Aave, and Aave has $10 billion in TVL, we would say that Chainlink has $10 billion in TVS. So Pyth has been able to grow its TVS through sort of the Solana ecosystem, layer 2 ecosystems, alt L1, sort of Ethereum killer, let's say, ecosystems, and it's been able to really grow at a very quick rate. We'll look into those numbers and sort of understand how quickly it's been growing. How big the TVS is. Compared to Chainlink, but it's been Chainlink has been sort of the dominant oracle for a very long time, with, I would say, very little competition, right? But Pyth seems to be doing pretty well in comparison, especially recently, growing a lot, especially as the Solana ecosystem, of course, grows a lot at the same time. So Pyth will benefit from the growth of these alternative layer 1 projects, which have been some of the best performing asset classes. If we look at the price trends on the Alert Pilot application, we can see that layer 1s over the last year has been the highest, best performing asset class, asset category in the last 12 months. So Chainlink market cap 9 billion, Pyth 500 million, TVS 17 billion, Pyth 2 billion. We have the protocol secured. We have 349 for Chainlink, 144 for Pyth. Unfortunately, I can't sort of plot this over time. Very, very nice to see sort of the growth of these two compared to each other. Unfortunately, DeFi Land doesn't have this. I'm sure you could probably find it somewhere if you wanted to spend the time, be a good few hours to already figure that out. But for now, we're just sort of focusing on the TVS. So market cap against the TVS ratio. I think this is wrong. Let's ignore that for a second. The average TVS per protocol. So we can see what's the sort of average size of these protocols being secured. Again, we're just sort of taking an average here, but That's 50 million for Chainlink, 13 million for Pyth. We can say on average, the applications being secured by Pyth smaller, I mean, to be expected. But even given that, it does seem to be sort of really still a good size. There's going to be a bunch of protocols in here that have like, no TVL, but is just still listed. Maybe they got rugged, maybe they got drained, right? Have nothing to do with Chainlink or Pyth. So I want to say this is sort of a super useful metric. But what I do like to look at is the TVS against market cap. So we can see that Chainlink has a TVS that's near enough around twice the size of the market cap, but Pyth has one that is around 3.6, almost 4 times the size of the market cap. So it's, if you want to sort of weigh up valuation, this could be a great way of doing it, to look at the total value secured compared to the size of the token. We can also look at the growth of the TVS over time. We can sort of look at Chainlink. We can see, okay, back in September, 11 billion, October 12 billion, 13 billion, 15 billion, 17 billion. So of course it's been growing, as to be expected. The price has increased throughout this time, but perhaps a more impressive growth is Pyth's, right? Pyth went from 500 million back in September to now the 1st of January, around 2 billion. That's an average month-on-month growth of 43% compared to Chainlink's 10%. Now, again, sort of limitations of DeFi Llama here, and again, all this data is from DeFi Llama, but we can't get an idea of, is that new applications coming to Pyth? Is that from new protocols being secured? Is this from just the growth of Solana being so crazy over the last few months that the TVS has just increased so much? You can imagine if there's a Pyth application that's a lending platform that has a very large amount of Solana locked in that platform, the price of Solana increases by 6x, and of course this number is going to be far more impressive. Right, so this is by no means perfect data, but if we sort of look at this on the surface level, which is what most investors do, and that's sort of we're trying to be ahead of most investors. And if most investors aren't doing deep research, then we don't need to be doing deep research to be ahead of most investors, if that makes sense. So the market cap of Pyth compared to the TVS, I think this is probably the most important metrics to look at if you want that sort of surface level analysis. Very, very strong for Pyth. Weaker for Chainlink. The growth of Pyth recently, very, very high. Of course, there's many reasons for that, compared to Chainlink, which hasn't grown that much, considering the price of Ethereum has grown by far more than 10% in this time as well. So if you wanted something a bit more medium risk, something that's, yes, in the real world asset space, also in the Oracle space, competing with Chainlink, a player in the space, it's not been dethroned since its inception, and is also targeting that sort of alt layer 1 that will benefit from the growth of that alt layer 1, from that sort of layer 2 parallel EVM Ethereum killer space. If that grows, so does Pyth's TVS, so does Pyth's perceived value. And I think that's going to be a very nice investment, something that I'm potentially looking to add if we do see a big crash in the next few months, like many are predicting. Again, if it doesn't happen, not a big deal. My bags are happily packed. I'm not betting on that by any means. I'm not sort of reliant on that happening. But if we do, I would be interested in picking up some more Pyth, perhaps a bit of a lower price. Buying right now, for me, it's not too interesting. I've got enough sort of medium risk assets. Actually, I think medium risk assets probably make up too much of my portfolio right now. So I'd rather sort of look for lower risk or higher risk plays. But in the future, I could definitely see myself picking up some Pyth if we get down to a good price. It's sort of beta play for that alt layer 1 space. It's been doing so well recently. So the next projects I want to look at here, one of them with a token, one of them without, is Ondo Finance and Mountain Protocols. We covered on Ondo Finance some months ago. We looked at this before it had a token. We were sort of assessing the different options they have in terms of USDY. If you've not watched that session, I definitely recommend going back and watching it. It will sort of help you understand the real world asset sector in a lot more detail, sort of help you understand what it is, these different options, focusing more on sort of the core principles of real world assets. But Ondo Finance, the stablecoin, probably the more interesting. Probably the more interesting token available is the USDY, but also it looks here the TVL is much higher in the US Treasuries. But I feel like this is what's been growing. This is what I've been hearing about more. This is what investors, at least, is what they're talking about more. But the Treasuries seem to have a much higher TVL. So recently releasing a token's been holding up very well, which gives me confidence in the market's interest right now in the real world asset space. And we also have Mountain Protocol. So very similar. Instead of USDY, they have USDM, but they are as well a yield generating stablecoin. Many of the same benefits that we have with Ondo, we have with Mountain Protocol with their bankruptcy remoteness. If you don't remember what that is, it's where there is a company that holds all of the sort of assets backing the USDM stablecoin in a separate company. So if Mountain Protocol's company goes bankrupt, the collateral for your USDM token should and will be, hopefully, if everything is built correctly, fine. So it won't matter if Mountain Protocol goes bankrupt, you can still redeem your USDC token. It shouldn't mean that USDM will depeg, right? If there's issues with Mountain Protocol, which is great, of course. But sort of assessing these two, they're so similar. It's very hard to sort of look at which is better, which is worse. It's also very soon. We also can't analyze the token. But from a product perspective, Ondo Finance seems to be doing way more. They have the treasuries, they have money markets, they have a bunch of other sort of funds. Maybe not anymore. I think before they had more, but it seems they've maybe even sort of shrunk that down since we last looked. But they have more products than Mountain Protocol, who is just focusing on USDM. But one of the things I was doing before the session was looking into sort of the on-chain data and trying to get an idea of, okay, there's $66 million TVL, but where is that, right? Is that, one big investor who's got 30 million on-chain and then a bunch of sort of other big investors, and it's not really very diluted and it seems to be very centralized. And if that one investor decides to, put their money somewhere else, maybe take it out of the blockchain, put it back into their, bank, what's that going to do for the token? So how sort of diluted or diversified for money holders is the USDY token, comparing that to USDM. And I came across some sort of interesting things. I had it here. Just search for USDY. With Ondo US dollar yield, we can have a look at the holders on the Ethereum chain. We can see, one very big holder seems to be holding 3 million. That's sort of the biggest on the Ethereum blockchain. We can also check Solana. We can check many different blockchains and see how it's doing there. But this is holding a Gnosis safe. So there's a potential here. This is multiple people holding it. It could even be sort of assets owned by Ondo themselves, right? It's very difficult to tell when something isn't tagged as an exchange or with an ENS domain. You could look into it and try to figure out who this is. I don't think there's really too much value in doing that. But what we can see is that tokens do seem to be very centralized within a sort of a few wallets, especially this one. But even these down here, some very big holders holding large amounts of tokens, and also just not many holders at all, right? 95 token holders on the Ethereum blockchain, right? We can also look at, if you want to find it, you can go over here and search USDY. We could look at Mantle, we could look at Solana. I did it for you. It's pretty much the same. It seems to be a very big amount of tokens in one place, and then the rest seems to, not have many other holders. So it doesn't seem to be super diversified. There doesn't seem to be too many people actually using the application, although the TVL seems to be high, seems to be very centralized among a few individuals. And though I haven't checked treasuries, I can assume it's a similar story. You want to go and do it yourself, it's very simple. You want to find either the contract address, put it into Ethereum scan, like I did for USDY, and then search for holders. You can't find the token by searching for it here. You can look on CoinGecko, they'll have it. You can find the contract address, you can search for it. You can do your research. But I'm assuming similar story in that centralization of sort of a few holders holding most of those tokens. Let's also take a look at USDM. So putting this up here. So Mountain Protocol USD. We can look at the holders and we'll see, okay, very large amount of tokens in one wallet, but it's the wrapped USDM contract. So I'm sure many of you are familiar with the idea of wrapping tokens. When something is yield bearing, if you want to, well, what is a yield bearing token? Yield bearing token is a token that automatically generates yield without having to claim it. So if you've got USDM in your portfolio, let's say you've got 1,000 USDM, Well, if you check back next month, maybe you've got 1,003 USDM, right? So the interest just automatically rebases and goes back into your wallet. But with a wrapped version, it's a exchange rate based sort of conversion. So the token has a different value. You can see here, $1.11. So how can a stable coin be worth $1.11? That's because you get the yield when you sell the asset. We've covered this many times in previous sessions. So I won't explain any further than that. If you're not familiar with it, definitely go back, check those other sessions. We can see the holders of the wrapped USDM tokens. Well, it's 99.96% the Manta Pacific Bridge. So Manta is obviously a airdrop token that came out very recently, that layer 2. I'm sure you're all familiar with that. If you were doing any airdrop farming, there's no way you could have done any airdrop farming without hearing about this. It was everywhere for a very long time. Of course, the airdrop was really nothing to be super excited about when it did come along. But USDM has partnered, or Mountain Protocol has partnered with Manta to offer interest-bearing stablecoins. So we can assume that this is everything that's been locked within their bridge. It does raise some eyebrows how there's so much, and it's pretty hard to sort of find details. But what I think may be happening is if you bridge USDC or any token to Manta, it's converted into USDM, and then that USDM starts generating yield. It does seem a bit strange because this is an asset that requires a KYC, how that's possible. So I guess when you bridge, the funds become sort of owned by Manta, and then Manta has an account with Mountain, and then they can lock those tokens in there. Seems to sort of raise all sorts of questions, but a very high amount of tokens locked in the Manta Pacific Bridge. That is so 131 million. That's worth $145 million. So then we can sort of think about the different TVL of these assets, right? So a good way to get the TVL of a stable coin when it's something like this, when it's an asset that is 1-to-1 in dollars with no sort of over collateralization, right? If you deposit $1,000, you get $1,000 in USDY. We can just look at the circulating supply. That should tell us sort of what the TVL is. So if there's 35 million tokens, there should be $35 million of in this case is USDC, but maybe in the future it'll be USD in a bank. Maybe it will be USDT you can use as well. Maybe it will be it could be all sorts of things back in this, could be treasury bonds. So, but there should be that much in TVL locked that secures these assets. So if you can look at the market cap obviously is a reflection of the circulating supply, which is that's because it's off by 3 cents. But you can see here the circulating supply is 34,295,000. So that should be sort of the TVL of the token here. Is a bit strange because here they say 66 million. So I'm pretty lost as to who to believe. It seems like that should be the same. If you go on DeFi Llama, it's something else. So I'm pretty lost as to what to believe in terms of the TVL of the asset. And then we go on to USDM. Oops, wrong one. And there actually is no market cap. They don't report it. So CoinGecko isn't sure as well, basically, is what I've sort of deducted from this. They have the fully diluted valuation, so the total supply, which makes sense with what we saw with Manta having 120 million, and you got some somewhere else, you got some on Manta, you got some on Solana, you got some on Ethereum. So this seems to be correct, at least the amount of tokens that currently exist. I'm not sure about USDY. So it's become, at least in this example, very hard for me to sort of assess which has the higher TVL, which has the lower TVL. And then if I could assess that, I would sort of compare things like market capital. There isn't a token right for Mountain yet. So even if we didn't know it, wouldn't be super useful. But if that data was available, you could use that to sort of assess, well, Mountain Protocol has a way higher TVL, let's say, with the market cap was lower, perhaps Mountain Protocol was a bit more of an interesting investment. But for right now, there is no token. For right now, it's really not clear. They like to sort of say that this is very transparent. That's a word you're going to see a lot. But I found it very difficult to see the transparency in either of these assets, right? You think if you are backed 100%, right, you want to sort of show that off. Like, here is the evidence. Here is the audits of our reserves. As many stable coins do this nowadays to appear more transparent. For example, USDC, right? They have regular audits of their reserves, and you can see that on their platform. I think it's every week or every month they post a new audit. But with USDM and with USDY, I can't find that anywhere. Maybe I didn't look in the right places. I spent a good 20 minutes looking for both. If you do find it, be sure to let me know. Maybe they've added it later. Maybe it's just not there, right? After they say transparent, they don't make it easy by any means to find the transparency of the reserves of their assets. But for Ondo Finance, I think it's very interesting. If we sort of believe them at face value and say, okay, the TVL is 66 million plus 117 million, and I'll show you DeFi Llama, it doesn't add up. Or perhaps it does. 183. Yeah, 183 million. So this is correct, but I can't find those tokens on chain. So I'm a bit unsure as to where that comes from. But at least it matches from Ondo to DeFi Llama. Perhaps, yeah, I really don't know where this TVL is. Maybe I missed it. Maybe it's in a wrapped version somewhere that I didn't see sort of connected, but very unsure. Also, again, hard to find sort of the backing of those assets, where those assets are stored, in what companies, where are the audits of those companies. These things are a bit hard to find as well. But Ondo Finance doing very well. If the price comes down, something I'd potentially be looking to invest into. I'm sure we'll see a Mountain Protocol token sometime in the future. They saw the success that Ondo went through with their token. I'm sure they're going to sort of want to follow suit and also release their own very soon, and the market conditions are good. When that comes out, we'll look at assessing both and see which makes more sense as an investment, see which is more enticing. Mountain Protocol's partnership with Manta seems to do very well for them. They've increased their TVL pretty massively through that partnership. That's a great sign. Again, when the token comes out, we can do a bit of a deeper dive into their TVL market cap comparison. Anyway, so what's next? So this Ondo Mountain, although I guess you could sort of classify it in that medium risk range. Maybe a bit too early. Maybe we're going to wait a few more weeks, see what the price does, see sort of how investors react to the product, see how the TVL changes. But right now, at least, I'd probably sort of classify it as medium risk. I would assume Mountain would be in a similar sort of range when it does release. But how can you find higher risk real-world asset projects? Well, I've sort of got two strategies here for you. One of them, I'm sure you're all familiar with, that's going on DeFi Llama and looking for, on sort of the lower TVL side, any interesting investments, any low cap real-world asset protocols that appear to be growing, that appear to be doing well, that are new to the space that you think may have potential. Well, there isn't many here to go through. Really, this is going to take you perhaps a few hours. And it's going to be pretty obvious which ones are good, which ones were good a few years ago and now are irrelevant. So even though there's 35, don't feel like you're going to have to sort of look through each of those for an hour or two. No, it's going to be pretty clear which one sucks, which one's bad. And we'll delve into a few of those momentarily. But another way to find assets that I've found to be very useful, actually, to find some of the more interesting, let's say, what asset protocols is actually by looking at Polytrade. So what Polytrade is, it's sort of like an aggregator, really, or it's more like a dashboard where you can look at multiple different real world asset protocols in one place. In some ways similar to DeFi Llama, in that you can find like the best rate for a token that you want to swap, right? But this is more sort of focused on, as they have there, equities, metals, Pokemon cards, real world assets in sort of the physical form, and real estate. So they have all of the, it's not out yet, so we can't sort of use it. But what I was finding useful was being able to look down here at the protocols that they've partnered with. So this is sort of a good way to maybe shrink down this list. So I'm looking at, okay, what are they working with? who have they picked as being worthy projects to be involved with? They're not going to want to partner with a liquid, $10 million protocol that was cool 3 years ago, but clearly been abandoned since. No one's working on it, but it could have that sort of skeleton crew keeping it alive or making it look alive when really it isn't. I would like to think that or like to hope that at least Polytrade, and we'll verify that Polytrade is picking protocols here that are alive, willing to partner, willing to grow, wanting to grow. We can already see the one that we've looked at before that did very well for us, which was Swarm. Swarm, the real world asset protocol with a license in Germany. But this is where I sort of came to looking through these different applications, looking at these different projects, as opposed to going through the DeFi Llama list. So some of the interesting ones that I found here, one of them was BactFi. Let's open this up. We can say BactFi, again, in some ways similar to Ondo Finance, having these different bonds, different treasuries that you can invest into. See if we can get a look at the products. Most of these sort of real world asset protocols, if you've used any of them, I'm sure you know this already, but of course they require KYC, which means often it's pretty hard to understand or at least get a feel for how their application works, because first you need to KYC, make an account, and I don't want to give my passport to every application with $10 million in TVL, so I've not signed up for many of these, only a few that I'd use personally. But we can get an idea sort of what it is they're doing. So treasury bonds, etc. Many ways similar to Ondo Finance. I'm not sure if they actually had on DeFi Llama. There it is. So 44 million in TVL doesn't seem to have really grown or decreased much in the last, or since September. So maybe you want to sort of check the chain and try and figure out where this money is coming from, how it's not really grown, how it's not really shrank. Not super interesting, but could be something to keep an eye on. Could be interesting in the future. Another one here is Goldfinch. So this is again a pretty common real world asset application. There's a bunch of these. I didn't want to sort of spend much time focusing on these. I think they're all pretty the same, right? And when you understand them, I don't think they're that interesting as an investment. But what you're doing is using your cryptocurrency assets as collateral for loans, like a bank. But different from most cryptocurrency sort of lending and borrowing is these aren't collateralized. So you're giving them to a bank, well, not a bank, sorry, you're giving them to a company, a business, maybe even an asset management company, who is going to use those assets to generate a yield. Maybe they're growing their business. Maybe they're investing it into whichever stocks. Maybe they're putting into some private equity investments. Whatever it is, there's a whole range of things happening here. But for some of the sort of yields they're offering, I don't think it's that interesting. I think there's better ways to get 7%. For example, putting your funds in Aave, where it's collateralized. So worst case scenario, you can get your money back if the borrower doesn't want to repay, if the borrower goes bankrupt. It doesn't matter because their funds are collateralized and they can't get those funds out unless they put back in the collateral. So lots of sort of stuff here. It's predominantly in sort of Asia and Africa and developing countries. Maybe that's something you find interesting and something where you want to put your money. For me personally, I don't think it's worth it for 8% APY. I think the risk is just too high. Lots of sort of stories about these applications performing terribly, offering bad loans that never got repaid. I mean, just obvious scams in many cases. If you want to invest into someone's rice field in Southeast Asia, I mean, this is the place to do it. But do you want to do that? Me personally, no. So I'm not sort of that interested in these applications. Perhaps if it was more towards a lender or sorry, a borrower that I was more confident would definitely repay it, it'd be something I'm interested in. But I think there's opportunities in the crypto space for real world yield. But I could see how something like this for someone else could be of a lot of interest if you are in that sort of traditional space. And this is something you do anyway. Maybe doing it on the blockchain is a bit more exciting, a bit more enticing. Maybe it's a bit more useful. Again, I don't see sort of too many ways how this would benefit, but maybe I'm missing something. Next one here is a launch pad for real world assets. And again, pretty similar. I think we'll have to change a VPN here. Oh, all good. So real world assets, tokenization, Launchpad, and the DEX. Doing two things at once, but that's very normal for Launchpads. So if we're thinking about Launchpads, I'm sure you're familiar with getting without connecting. With the idea of a Launchpad, it's similar to an ICO in sort of the crypto sense. You sort of like call it like an IDO, initial DEX offering, where you're investing your money into a product perhaps before it's even done. Many just like that, putting your money into a project before it's done, before it's released at a lower token price. When they release, they give you your tokens. Usually, there's a vesting period. I prefer the Launchpad token opposed to the Launchpad investments. I made good money on Launchpad, like tokens of the actual Launchpad, but buying the Launchpad investments, the numbers that I ran when I sort of calculated the profit of those investments, it was always pretty poor. I mean, the chance of buying something that has any sort of return on investment was incredibly low. And then you have to account for the 4, 5, well, 1, 2, 3, 4, 5, year vesting period that would come before you even get your tokens, or the very slow release of tokens you'd experience over the next 3, 4 years. For reasons like this, it wasn't very enticing to join any of the tokens launching on those launchpads. But this is a bit different. You're investing into real world companies. I guess perhaps they also have tokens, or perhaps you're investing into their sort of and purchasing their security, their stock. And here it looks like it is a security. I'm sure they'd have both in the future. But I don't know anything about healthcare or energy, so it's just not that enticing to me as an investment to sort of be buying something low level like this, which is sort of risk. But perhaps if you like sort of equity-based investments into these startup projects, this is a place where you can go and make said investments. For me, I can only speak from my perspective. I don't think it's very interesting. For the average crypto investor, are they going to want to go and invest into a biotech startup? Probably not. Maybe energy makes more sense when they think about sort of crypto mining and those sort of things. It's perhaps more relevant to cryptocurrency. I could see something like a crypto mining startup that does something special, using some creative way to generate electricity. That could be something that does well on here. But I think it's just too far out from what crypto investors are looking for to be super successful. We also have Teller. I think this could be a bit of a reach to sort of classify this as a real world asset. That's how they're branding themselves, and sometimes branding and perception matters anyway. So this is just a lending market. But you can also lend ENS domains, you can lend NFTs, and you can lend your tokens, sort of for a fixed duration, so a bit different to lending markets that perhaps are used to things like Aave, for example. On Teller, you can fixed duration lending, so 1 day, 7 days. Not sure how that comes under real world assets, but they seem to have managed to brand themselves that way. So I thought it was worth covering because it seems pretty reasonable. They've got a point system, so you can collect more points for a disappointing airdrop sometime in the future. But if you want to here, providing capital, interest rates are pretty nice. I'm not sure how liquid it is. I'm not sure sort of, if it's like a matching borrowers to lenders sort of system. So I'm not sure you'd actually earn any yield, depending if someone wants to take the loan out. But some of the sort of recent positions, you can see it in here. Netted some nice APYs, but the volumes seem pretty low. Prime seems to have a very high volume. A bunch of shitcoins seem to have high volumes, but Ethereum not so much. Again, not super real world asset focused, but managed to brand themselves as such. And then the one that we've covered before, but I think it's still very interesting. I think it's still really one of the best sort of real world asset investments out there on the market, especially in the higher risk sector, is of course Swarm. So Swarm, they have that license in Germany that lets them be able to offer in a regulated way access to stock securities on the blockchain. So you can own BlackRock, you can own Coinbase, you can own Microsoft stock within your cryptocurrency portfolio. Of course, if you think about it on a long-term time horizon, the opportunities this opens in terms of being able to use these assets as collateral on Aave, to borrow USDC, something that maybe you could do at your bank, but I think most people would probably struggle to be able to do that. But on the blockchain, it's very easy, right? Anyone can do it. You just log into Aave. I'm sure most of you have provided collateral to Aave in the form of Ethereum, perhaps USDC or USDT. Super simple to do that. And that's what we can do on Swarm. We can invest into these stocks and many, many opportunities to expand upon that sort of product offering in the future. One of the things I will say here, although price is still low, it's still, I would say, could be a good high risk investment for your portfolio. If you want something in the real world space, I think probably one of the best we've looked at, or at least that I've seen in the real world space in that high risk sector. But the TVL, it's not crazy at all. 9 million seems pretty low. That the market cap last time I checked, let's check again. I think was 15 or 20. Okay, yeah, 22 million. So, it doesn't have the sort of the best numbers. So we like finding projects that have, very high TVLs, very high TVS compared to their market cap. In this case, Swarm is not showing the same numbers. Seems pretty low. But it is, at least from what I've been able to find, and I spent a lot of time looking. I was looking on DeFi Llama. I was looking on, like I showed you before, on Polytrade, looking at the different options available here. Swarm is the only one that I found that lets you buy tokenized real estate, tokenized stocks. I've seen many examples of synthetic stocks, which is not really owning stock. But in terms of tokenized, Swarm seems to be the only option. Unfortunately, for people living in the US or Canada, you can't use it. You can't actually purchase these assets, which may be in large part why TVL is quite low. Although I think similar story for Ondo Finance and Matrix, Mountain Protocol. But yeah, doesn't seem to be getting as much use as I would like. That could change in the future. Who knows? But yeah, I really have not been able to find that. I looked for a very long time. Anything similar to Swarm available in the market. Of course, if you know something, if you found something, if you have a micro cap somewhere with a similar license offering something similar, be sure to share it. Love to check it out. Love to see some competition for Swarm. I think the competition only makes these projects better. But yeah. Another thing with Swarm, I was trying to look into the license that they own. So they have it here. I think. About a section. I was trying to find online sort of a certificate for their license. Right? They say it here. BaFin regulatory regime. I wondered if there was like a piece of paper or some sort of qualification they had so they can offer this. I was trying to find that. I looked at multiple different German company registries. I couldn't find any sort of evidence or licenses listed online for this company. So regulatory regime under BaFin, what does that mean? So maybe the term, when I was saying it before, of license was slightly inaccurate. It may be more like this is just something they're allowed to do anyway. It may not be a license. Maybe the terminology when you sort of start translating things, these sort of legal terms, always gets a bit confusing. So they say license, but license in Germany may not mean the same thing that we sort of think about when we think about licenses in the US, right? When Coinbase gets a license to be able to operate their exchange in this state, or Binance gets a license to be able to operate in the UAE, for example, it's pretty clear what that means. But from just experience, I found that the terminology can often be not as clear cut when you're translating between multiple languages. Of course, UAE speaks Arabic, but everything seems to be done in English, and the terminology is pretty similar. But yeah, can't find much details online as to what this actually means, what this regime means, and also just I'm just very surprised they have this license, or license in quotations, and they haven't done so well. They haven't sort of grown this product massively. I just expected something like this, especially if it's the only one around, to have a lot more eyes and a lot more attention on it, and a lot higher market cap. You could sort of think about that and think, okay, it's heavily undervalued. But I'm just not sure how they've not been able to market this product better. That's sort of my sticking point. Maybe that is something to do with the license. They can't market. Who knows? But you always see advertisements for things like Trading 212 and maybe Robinhood if you're in the US. I'm not sure how it works there, but at least where I'm from, you see lots of advertisements for these sort of products. But I've not seen much in the way of promotion advertising from Swarm. And if we want to spend a bit of time thinking about this application, some red flags on their Twitter. I don't think they've not hired like a marketing person, or if they have, they're not very good. So their pinned tweet is listing on MEXC. Anyone who's into crypto or into sort of higher risk cryptos, they know that MEXC will literally list anything with a heartbeat, right? Either things without a heartbeat, MEXC will list. This is not like an accomplishment, and the fact they've pinned it doesn't exactly fill me with confidence for their application. What they should really do is save up some money and purchase listing on KuCoin or Bybit, right? Yes, it's not free, but it opens up way more doors in terms of getting your token out there. That's the change I'd make if I was in their marketing team or their sort of product team. They're also just retweeting people talking about their token, which I just don't think is very professional. And maybe what does my opinion mean more? I don't have a crypto project. I don't have a crypto token, so what do I know? But this is, I guess, not really the sort of thing that I'd expect to see from a business. Like if Vitalik started tweeting, if people were tweeting and tagging Vitalik in like, oh, I just bought some more Ethereum, I think it's great, and Vitalik was retweeting it, I think it'd be a bit weird. You wouldn't really expect it. And I don't think it's to be expected of a cryptocurrency project to sort of promote the purchasing of their asset. Although that's like what they want, it's like you shouldn't make it so obvious. I hope that makes sense. But they're regularly tweeting about people buying it. They're also indirectly just advertising everyone else's product when they tweet, like Centrifuge, Goldfinch, we covered this one, right? These other projects, and you're retweeting it, you sort of direct people away from the product, which doesn't seem very smart. But yeah, many such cases where they're just retweeting anyone that talks about their product. Doesn't seem like a very good marketing idea, right? If I was them, I'd probably want to rethink that. But yeah, product-wise, they have something great. And if this is a real license that's hard to achieve, I don't see anyone else with the same license. And I'd assume that people would be trying to achieve something similar, right? This is tokenizing stocks is what everyone talks about. Jamie Dimon, Larry Fink, they're all sort of thinking about how can we, or they're talking about, maybe not thinking about, I guess they are, but they're not doing it themselves, at least not right now, but they're definitely sharing the idea that this is a big part of the sector. And I just see no one else doing it, and the people that are doing it don't seem to be doing it very well. So although I hold some Swarm, although I think it's a good, could be a good investment, it's just a few red flags, and I don't think they're fully capitalizing on what the product they have and what it is they're doing. I think they could be so much better. So yeah, it's a bit of a confusing one for me. I think if they had something that was very hard to attain, and I'm assuming this license is hard to attain because no one else has it. I'm assuming other people would want to have it because lots of very rich, important figures talk about it. And I'm very confident that it could do very well. They just don't seem to be capitalizing on the fact that they have it. So I can't really wrap my head around what's going wrong. That's the first one. But that being said, the price is up 6x on my investment. So I can't complain. I think it's doing very well. Anyone else that got in, congratulations. Would I buy more at this level? Perhaps, right? Maybe I'll even increase my value. I think I have a pretty small portfolio, a pretty small position on a high risk asset. You sort of know how I make high risk investments. I put small amounts in, I see how they grow, take up my initial investment. I still think even right now it's a good position, right? Low market cap still. I just don't get it. I don't know why it's not capitalizing effectively on the product they have in front of them. But yeah, apart from that, not too much else sort of going on. Super interesting in the real world asset space. I think Ondo Finance is going to be everyone talking about this right now. The tokenization of essentially a treasury, right, where they can generate yield on a stable coin. I think that's going to be what's pretty big in the real world asset space. I think that's what we're starting out with. What we need is something that works in the US. I believe USDY is also still restricted with only to organizations and individuals outside the US. Yeah, so again, still nothing available in the US. When we get something available in the US, I think that will be a killer investment. But my suspicion is something available in the US may not tokenize, right? They may stay away from sort of tokenizing. Two sort of very big players that really support this idea. Coinbase having no token, right? They have a stock, of course, they're a security, they're publicly listed, but they have no token. Also, Circle, right, recently announced they're going to go for an IPO. So again, not going for a token. So anything that's sort of going for all of the US certification, all of the US licenses doesn't go for the token, right? And I think that probably just makes sense to get the licenses in the first place. Having a token probably isn't going to be very helpful in achieving those licenses. If we do get something that hits both, right, in the US with a token, I think that could be huge. But another point with these yield-bearing stablecoins, it's very hard, at least in my experience, to get a crypto investor to be interested in 5%. They just don't care, right? 5% is like daily volatility on an investment they made in their portfolio. Why would they care about that on a yearly basis on their stable coins? It's like trying to convince someone to stake their tokens, right? Maybe they're holding an asset that's increasing, decreasing by 10%, 20%, 50% every single week. Why would they stake it for 9% per year? It just seems boring and not interesting. And why would I want to go through all that stress to figure it out to only make 9% per year? There's just a very big disconnect in terms of what's an expected return on investment and what's a good return on investment in cryptocurrency. People just can't be, people aren't super interested in these assets. And I think that's proven here by the fact that there's $66 million TVL. Well, we said $30 million. If you look at the on-chain data, so again, I'm not sure how this is even calculated. But only, was it 97 holders or something very small, right? Very small amount of holders. So clearly the sort of the broader market's not signing up on Ondo Finance. And there's probably far more, it's interesting to see the USDY token compared to the Ondo token and see which has more holders, at least right now. Of course, most of it's on exchanges because it's a new token and you can't really withdraw it yet. Coming up. Spending on CoinGecko. But yeah, I'm interested to see how many more people are holding USDY token compared to the Ondo token. Okay, 330. Oh, no, 95 holders. I was right. 10,000. Right. So 95 people use the product, and then there's 10,000 people using the token. Some of these could be, like fractions of a token in their portfolio. So it's not exactly the fairest comparison. But even if they 10 times the amount of people holding the USDY. Yeah, it's not looking incredible for the. Is this even the right? It must be. Yeah, different logo. But yeah, not sort of the best look. For Ondo, more people invested in the token than the actual product, but of course, what do we expect from cryptocurrency? That's sort of how it goes, it's a speculative market. But yeah, to summarize, Swarm I still think is interesting. I think they need to capitalize on what they have. They're not doing it correctly. I think they should fire their marketing team, hire someone else. Maybe someone can communicate that message to them. I think Ondo Finance is very interesting. Again, I'm still waiting for the price to fall down like it normally does off listings. If it doesn't happen, I'm not sort of going to be super annoyed that I didn't make an investment. I think Pyth could be interesting. Again, at a lower price, something that I consider dollar cost averaging into if we were to see the market tumble. I'll keep an eye on Mountain. I'll see how it goes there. When they release their token, I'll do some analysis on sort of the relative value of Mountain compared to Ondo, also maybe compared to BactFi. Again, that's a sort of a similar product. Looking at those yield-bearing stablecoins, I think one of those will be big, maybe even two of those will be big, maybe even three of those will be big. But I'd like to have some money in a token in that space. I just think real world assets is going to be huge. I think the space isn't where it's. We can check back on this in 3 months. I think it'll be different again. We check back. We looked at this 5 months ago in August of last year, and the projects we're looking at now are new. They didn't exist back then, or they existed back then, but they were pretty small, and they've grown massively since. Even Swarm, which we're saying has a low TVL, it still has a great growth in TVL over the last few months. So it's been doing good. It's been getting bigger. I think the space is very interesting. The space will keep growing, and I'm definitely interested in continuing to sort of look back at this. I really want to, even if you don't make investments right now, I think it's just really important to just be aware of what's happening in the real world asset space. So when it does become something people are interested in, about all the different sort of sectors within the sectors. So it's not just as simple as real world assets. We've got tokenized treasury bonds, we've got tokenized stocks, we've got those loans to people's rice farms in Southeast Asia, right? There's so many different things happening within this one sector. It's almost sort of just an over generalization to call it all real world assets. I think it's going to be very, very big. Of course, Coinbase thinks the same, JP Morgan thinks the same, BlackRock thinks the same. I just don't get how it's not correlating right now to money in that space. I guess it just means we're early to it. But yeah, lots to think about. Hopefully, some more investments ideas. Let me know in the group what you sort of thinking to put money in yourself. You're looking more towards Pyth, or you're going to slightly higher risk like Swarm. Perhaps you want to provide some loans to some different places. Perhaps that's something that's interesting to you, or perhaps you want to invest into some launch pads for some biotech or energy funds. Lots of different options, lots of different investors. That's everything from me. Any questions, or wrap things up here?
No questions on my end.
Awesome. All good. Thank you very much, and goodbye.